Good morning. Welcome to the XM.com weekly market update. And with me once again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
I thought a good segue this week. We touched on India last week.
Yes.
Did a bit of a deep dive.
Yes, we did.
A few days after that, their GDP numbers came out 8.4%, which they were expecting 7.6%.
That's right.
So it just goes to show. And that chart there, that's a 5-year chart. That's solid economic growth numbers.
Yeah, it sure is. And I mean, I'd like to probably lay over those early times as far as China, maybe back 15 years ago, and where their numbers were and what they represented. This is nearly a mirror image.
And you would think it will continue, considering the amount of investment going into the India at the moment. Yeah, foreign investment as well as what they're doing domestically from an infrastructure perspective.
And at the end of the century, we touched on that quickly last week, and it's worthwhile for the viewers to watch it again, but at the end of the century, they've got 1.5 plus billion people population. China will have 800 million. So you've got more consumption, Andrew. It's simply, there's your numbers.
Certainly is. Let's head over to Europe. The Eurozone CPI number came out. Like, the CPI numbers there are actually pretty good at the moment. They seem to have more or less got it under control. I think the issue, though, is that within Europe, some of the bigger economies, Germany, France, Italy, are all either at zero or below zero from a GDP perspective.
Exactly, and Germany's really under the pump. They're looking at austerity, and really they should be looking at expansion. They need stimulus. But it's pretty hard to sell. You're probably getting the new Benz, but the majority of people aren't getting the new Benz, Andrew. And you'll like the 600. They say it's going to be a nice model, but no, the general consumption as far as Porsche, heavy industry, and all of those, I suppose, commodities that Germany takes on board and sends to the world, the consumption is very weak.
Yeah, certainly is, and it's certainly showing up in the Eurozone numbers.
Yep.
The Euro, once again, not doing a great deal, under a bit of pressure, but that's not surprising. Later this week, for the ECB meeting, unlikely to change interest rates at this point.
I think so, and that'll, you're pushing it out from we're in March, Andrew. Let's run it to May or June and see if there's any further action from the not only the numbers, but as far as policy's concerned, we're just in the hands of the ECB. But when they're looking at that euro, it hasn't really done a lot this year. It's been very, very range bound and. Nothing like the yen, of course.
Yeah. Over to the US, once again, the US economy is in pretty good shape. There's a lot of things happening in the background, particularly around debt. Yeah, that's the big issue at the moment, and it's gathering a lot more press at the moment. So, but the economy is still, from a GDP perspective, still tracking along pretty well.
Yeah.
The labour numbers are still strong, which everyone's got the job, but who knows what's going to happen? Obviously, the election later this year. There's plenty of uncertainty and volatility in the months ahead, I suspect.
Well, a couple of things. First off, deficits rising at around about $1 trillion every 95 days or less. So is that money someone borrowing it? It's got to go back into the society in some fashion, or the economy. Is that one of the big stimulus moves that's pushing 3% GDP? Secondly, and you can't discount that. Secondly, of course, as you said, November is the election. You're saying it could be political if you put it there in September or October, which it probably would be deemed that if that was the first cut. So you're pressured to the other side of it. You've got to see July or August as some form of move to the downside, or it's which would be even still argued in August that it's political. So, I think this next 6 months are going to be very interesting how this all plays out.
Yeah, and the PCE numbers came out as well. Yeah. They were on target, so slightly higher than what they had been previously.
That's right.
The consensus was 0.4. So,
yes.
So there's still the inflation. You'd sort of say it's under control to a certain extent, but it's still
sticky.
Sticky and a little bit higher than where they want it.
Yep. And you don't want, and that's been traded. I think that's a realisation we've seen in gold and, of course, Bitcoin up 7% in the last day. So, if that doesn't come down, Andrew, then, it's going to be August or September, you would have to think, until you get some sort of move.
You would think so. Gold, flavour of the month.
Is it what?
Huge moves only in the last week or two. This chart gives us it goes back roughly 50 years. So it gives us a good view of what gold has done over that period of time, where the real spikes have been. And are we in for that, as it says on the chart, the third gold cycle?
Well, you would have to think yes, and a couple of reasons. First off, debt, which is just enormous. Secondly, the debasement of currencies and inflation running, very, very hot. So, the general mood, central banks are buying like crazy, and we might even touch on that as far as another segment in the next couple of weeks, central bank buying and how much they've purchased over the last couple of years, and that's across the world. And then the next leg up, Andrew, well, you're at record highs now. Has it got the capacity to take 2,500 out over the next matter of months? At the moment, it's very, very strong, and we've just got to see how it trades. But there's a lot of, I think, interest from the retail market, not only the paper market, but certainly jewellery consumption and physical gold.
Yeah, certainly. And finally, the oil creeping up a little bit.
Yeah.
Once again, there's no crazy moves there, but it's sort of heading up. Once again, we've talked plenty about the cuts in production, etc.
Yep, 2 million barrels.
But
they're rolling that forward to the end of June.
Yeah. But to be fair, it's held reasonably steady sort of since the start of the year.
Yes, it has.
Up probably maybe 10%. So.
Well, that's right. That war premium was certainly stripped out of it from October, and we've just got to see anything geopolitically really drives the market as far as the Red Sea, what's going on in that whole region. Bab el-Mandeb, the Gulf of Fears coming around from Yemen, Djibouti on the left or on the western side, and then sailing through the Red Sea. And that's causing, still a great degree of geopolitical concerns for ships, and one of the ships actually sunk.
Right.
So that's not a good sign.
No.
English flagged, I think.
Right. Okay. Yeah. So plenty of activity again. We'll keep an eye on things over the next couple of weeks. We can obviously touch on gold a bit more.
Yeah.
In the coming weeks, because that's
well, it's hard to discount it, isn't it?
Well, it's one of the biggest movers, like other than Bitcoin, but with gold, plenty of activity, and as you say, plenty of countries and central banks are buying up.
Yes. And it's been dramatic over the last couple of years, and I think retail land is just really waking up and going, wow, I need to have this in a portfolio, either a mining stock or, of course, physical.
The old fear of missing out.
Yeah, well, and these times it creates uncertainty, and that's probably one of the key drivers pushing gold. It's volatile, that's one thing, but if you're storing physical, it's not a bad thing to have in the bottom of the closet.
Yeah, that's right. All right, thanks again, Pete.
Good to see you. Next week. Look forward to it.
And that's the XM.com weekly market update.